Good morning, traders. My name is Adam Harris. And this is my weekly overview. So looking into the week ahead, focusing temporarily at least on the economic Canada news. We have a holiday today out of the US, so there's going to be reduced volume and activity. It's going to be a bit of a funny day. Potentially Mondays can be like that. It is Washington's birthday in the US. And then moving on into tomorrow, Tuesday, for the UK at 9:30, we've got PMI data. So PMI data, meaning that, when I compare the performance of the pound against the euro, the Australian dollar, the Kiwi dollar, it's performing fine. It's not really that strong. It's not that weak. A lot of people seem to be under the impression that the UK economy is weak, or that the pound is weak. Not so much at the moment. I'm not really seeing that. It's not standing out. Okay, so then we've got US dollar, we've got existing home sales. So the reason I bring this up on Tuesday at 3 p.m. is that there is this there's these murmurings of a housing crisis in the US, which is similar or worse than the 2007-2009 global financial crisis. So some of you might be too young to remember that, but that was our last really big global financial crisis. So there's a lot of people that are just screaming that is going to be, that it's just this explosion waiting to happen, sort of financial explosion waiting to happen. We're going to have to see if that is the case, but I would keep an eye on home sales figures to see if they start to drop, or if there's any shocks that come out of that data. But I'm not really expecting it. In almost every other area, the economy is rock solid out of the US. And on Wednesday at 7 p.m, we've got FOMC. So what the market is going to be looking at this week is to see what is the kind of the speed at which rate hikes and the amounts, the quantity and frequency of rate hikes happening now, because it does appear the inflation, rate of inflation does appear to be slowing. So is it enough to bring it back under control, or do they need to increase it? So, however, because we've had so many rate hikes already in the last 6 months, the market is not as upset about it. It's getting used to the idea of rate hikes. So I don't expect as much about that. It's really if something new happens, if they go, oh no, there's some really bad data we've got here. I'm not really expecting that. Right now, a lot of the data out of the US is showing one of the strongest economies that it's had since World War II, since the end of World War II. It's looking incredible. But the world is very complicated, so we'll have to see how that goes. In other words, there's different areas, and so maybe one area is suffering and the rest of the areas are fine. So we have to kind of keep an eye on that. One of the things I can say is it does appear as though the middle class is starting to strengthen in the US, and if you have a strong middle class, it supports both the lower and the upper class in terms of income, not in terms of class status, but that is why it is. If you want a really stable economy, you want the middle class to be stable, if that's okay, if the middle income bracket. Okay, then on Thursday we've got CPI for the euro. Not too concerned about that. We've got JPY, we've got a yen, Japan holiday, Emperor's birthday, and then we've got, out of the US, we have got GDP, jobless claims, crude oil inventories, and then on Friday, we've got PCE price index and new home sales again. So we've got existing home sales on Tuesday and new home sales on Friday. So the things that people are going to be looking for, that the market is going to be sensitive to are jobs and home sales. The jobs are fine. Like, there's not a problem with that. Even if you're hearing about tech companies giving cutbacks, those people are usually finding work somewhere else. And that's usually a consequence of quarantine, when we were all stuck in that. But in terms of actual people working, not a problem. Most people are finding work. There's a shortage of people. Pay is better, which is why inflation is always on the edge of things, because people are getting paid more now and everyone's working. So everyone wants to spend a bit of money, and that's kind of what's causing it. So then I realize I appreciate this is a slightly longer than normal video, but it's kind of important to cover a lot of these for the week ahead so that you understand kind of where we are globally and kind of what's going on. Then we have the dollar index right now. Although I expected it to strengthen, I still expected it to tap 100. It never did. So it's interesting to me that on Friday we actually finished with a weaker dollar. I was expecting a strong finish to it. That was the one I was thinking was more likely. We've got a bit of a rejection. Doesn't mean we're out of the ballpark yet. We could have a week that finishes higher, so we finish with a stronger dollar over the next week. However, it does look as though we might possibly see a weaker dollar in the first couple of days. So we start to see the euro push higher, the pound push higher, dollar yen might head a little bit lower. However, the dollar yen itself and the yen pairs are looking quite bullish. So when I say bullish, I mean those charts, dollar yen, euro yen, pound yen, tend to look as though they actually want to push a little bit higher. So there could be some good money making opportunities on those. Then we have, for example, if we move across, let's just see here, gold. So gold has come back and finally had enough of a correction. It's been on my watch list for like 3 weeks now. It's had enough of a correction. So this week, what I would like to see is that gold find a position of strength, find a floor, ideally around 1800. It can go lower. It's perfectly acceptable. That trend is really nice and strong. It's just a correction at this point in time. excuse me, and I'm expecting it to find a base and then potentially hit higher. So there could be some good money making opportunities on gold to the upside if it does resume its uptrend. Then having a look at the indices. So the indices are still quite bullish, but this is where it gets interesting. On the indices as well as on equities, there are mixed signals. So we've got some charts that are looking weak and some charts that are looking really bullish. This is unusual. I mean, it's almost like 50-50. When I go through my usual watch list, there's some that are looking quite nice and strong. They've had a bit of a correction. They look keen to carry on this week. We've got some that are looking a little bit weak, and it's all over. It's not just, it's not specific to a country. It's not specific to a particular sector. It's just a real mixed bag. So overall, I still lean bullish. I still think that the markets are keen to resume. We'll see if that's going to be the case. Even cryptos pushed up a little bit higher. Bitcoin, Ethereum, a lot of those are sitting on levels of support. They look really nice and strong. Bonds, let's just have a quick look. So bonds have had a big correction to the downside. So I'm still bearish on bonds. But crypto's looking that they've got that potential to move to the upside. Equities looking like they have some good potential. Crude oil is very, very kind of neutral. It's drifting in a range. So we'll have to see how that goes. But I do think there could be some great opportunities to wrap up. There could be some great opportunities on currencies currencies as well as potentially equities and the indices. I think there could be some good stuff there. And gold is definitely worthwhile keeping an eye on. If gold is going to climb, we'll see the same in other metals. So if you if you're trading copper or you're trading platinum, you should see those opportunities there as well. I'm going to stop talking now. So I want to wish you a wonderful week. Trade sensibly and carefully. Make sure that you trade your plan your trade, and trade your plan. And I will see you in the opening bells. Thank you very much.